Welcome to episode 27 of the Wealth Amplifier podcast. Patrick Swift here from the team. Very, very excited to be joined by a good friend and an excellent professional that we've worked with for multiple years at this point, my friend Jacob Ansel. Jake, welcome to the show.
Thank you for having me. Really appreciate being here and looking forward to this.
Good. I know it's been a long time coming, and it's difficult, I know, with the various important tax deadlines, of one of which has just recently passed. We are lucky to have you on the show, so thanks again. But just to give the audience a little bit of background, so Jake, in fact, obviously many of our clients who listen to the show probably know you at this point as well as their own CPA. But you're the managing partner of your firm, Vision Financial Group. You guys are headquartered in Morganville, New Jersey. Why don't you give us a little bit of background about you, about the firm, how it started, all that kind of fun stuff?
Sure. So I started the firm in the year 2003. And my idea was to deliver high quality tax and accounting services. And I wanted a firm that really took all the good that I have ever learned from all the various firms that I've been at in the past and start a firm with the good and leave all the bad behind, right? All that white noise that we hear about at other CPA firms. Today, fast forward, we're in 2024. We have about 45 employees. Our clients are a mix of corporate, individual, audit, non-for-profit. We run a wide gamut in all different industries, and we operate in every state in the US, and we also have some foreign clients. So I'm really happy, looking back when we first started the firm in 2003, it was myself and a partner. And I never thought that we would be in the position that we are in today. And I'm really happy to be on this podcast with you and share some of my ideas and thoughts, and looking forward to this.
Well, I appreciate that. And it is, I think, amazing from our perspective what you guys have been able to build. And we've been thrilled, obviously, to work hand in hand with you guys on quite a few things. But when you guys started the firm in 2003, it was just two of you, right? Your partner and yourself?
That's two of us, Jerry Maguire style, left the old firm and started this one.
which we can relate to as well. But now up to 45 employees. So over really, I call it a 20 plus year period, have really, really increased your employee headcount strategically. And I know one of the questions that you and I have talked about in the past is, from our perspective, I'm sure yours is similar. We've noticed the accounting industry has sort of become narrower over the last couple of decades, where there might have been, in fact, I know there used to be quite a few sort of mom and pop shops where it was a handful of CPAs. They did excellent work. And a lot of those firms have started to get gobbled up by, the rolling private equity that is affecting so many industries in the US at this point. But it seems like you guys are almost a unicorn in that you don't have this big corporate overhang, but you're certainly not a small firm at all. So can you just elaborate on your thoughts and what you've seen and how the industry has changed so much, and why you've sort of been strategic with your employee headcount and where you guys are?
Absolutely. I mean, look, accounting is not glorious, right? If you ask the average college student, what do you want to be? Investment banker, investment advisory, lawyer, doctor. It's very rare now that you hear accountant. So what happened was, there's a shortage of accountants, and the old school way of doing things doesn't work. The mom and pop shops, although we love them, and there are quite a few that are still out there, it's really hard to deliver excellent client service. The laws have been ever changing. The tax laws are extremely complex, and there's much more regulation going on now. So it's sad that the mom and pop shops are unable to really exist and deliver what's needed now. But it's an ever-changing evolution of this industry, and I get it. So, there's technological advancements with AI and automation. It's just unbelievable and incredible. And if I was a 1 to 10 person firm, there's no way we could have these type of technological ideas or implementations, right? We have a full-time network engineer on staff right? 24/7 to deal with any technology issues, to move forward with AI. So, it's partially the technological stuff. We have the regulatory complexity is extremely insane. I mean, just imagine, Pat, right? We're doing a return for a client, and we have to file in every state in our wonderful country and allocate all the income, expenses, payroll. It's just insane. But
Right.
I really love what I do, and I'm very happy with the CPAs that we have here on staff. And really, it's all about setting client expectations and client service. If you're not running around like a chicken without a head, for lack of better words, you can give better client service, right? I want to devote time to each client for what they need, doing their tax planning, giving creative ideas and coming up with things that really make sense. So that's a little bit where, the industry is at right now. And there's a lot of pressure, but not in our space. I don't think there's a firm around that's our size. They've either demerged and gone real small or have been merging up with the larger firms that are out there. So the pressure and the competition doesn't exist from our employee count, our size. A lot of the competition, right? If we're going up against a smaller CPA firm to quote on for our client, we have a really good chance of winning because of our diverse background and our CPAs. They're very qualified here. If we're going up against the larger firms, we have a good chance of winning because we're going to deliver the same quality tax return or audited financial statement, et cetera. However, the difference is going to be the client service.
Right.
No, that was a little long-winded, but I hope answers your question.
Very informative, and I'd agree and can attest to the work. I think that's why we've been so impressed too over the time in which we've worked together. Is we notice a lot of the same things. Is sometimes with the bigger firms where clients have their accounting and tax advisors, they lack a little bit of that nimbleness and that mobility. You mentioned the technological changes that every industry in our country is facing at this point. The ability to adapt and harness those, I think, is sometimes constrained when you're a bigger firm. And I also think the service piece is often what gets diminished. And it may not just be the someone picking up a phone when a client calls, but it's the consultative and the tax planning part. I know you guys take such pride in, and it really makes a huge difference for the end client. Which again, I think has been obviously a hallmark of what you guys have been able to do. You mentioned too on that sort of independent, which obviously we take great pride in as a firm that gives objective financial advice in our industry, and I know you guys do too. So maybe it's cliche and we're just patting ourselves on the back, but can you speak to a little bit at where accounting firms have sometimes become Frankensteins, and so have wealth management firms. They offer so many services as opposed to sticking to some of the things that they just do great and could be a little more conflict free. And I know you have thoughts on that. I'm just curious if you could touch on them.
I do, and the key is remaining independent. But I think what you said it best. Stick to what you do best. What do you do best, Pat? What's your strong point?
I think we're great planners for clients. I think we're extremely proactive around the various components of someone's financial life, and obviously the investment piece we excel at as well.
Okay, that makes perfect sense to me. What do we do best in our firm? Tax planning, bookkeeping, tax service preparation, audits, financial statements, all these types of things. That's what we do best. Are we great investment advisors? No. Right? Are we phenomenal at setting up a pension plan? No. I know what I need to know about pension plans. So if a client comes to us here, great example. I was on the phone with a client yesterday and she makes about $1 million a year. And I said to her, we really need to implement a defined benefit or a cash balance retirement plan. And we can sock away a lot of money, save some tax, and it grows tax deferred. She's like, great idea. Set it up for me. I said, actually, I'm going to introduce you to our TPA, our pension advisor, who's going to set it up. She's like, well, why can't you do it? I said, we could do it, but it's not what we do best. Right? I said, now you need somewhere to invest your money. Let me send an intro over to Pat. And she goes, well, if you're recommending the pension plan, don't you also handle the assets? And I said, don't you think that's a conflict? Dear client, you're going to save a lot of tax, but hey, I'm going to set up for you the pension plan and charge you a fee for that. Then we're going to hold your assets and we're going to get a management fee. So we're going to push that as hard as we can. No,
Right.
I'm telling you what to do, what's best for your financial future and for tax planning and savings. And she's like, you know what? I really respect that. And I think having a team together of various professionals that you know you can count on is what makes a firm better. A lot of firms are monsters. They do everything.
Right.
How can you be good at everything?
Right.
Right? Jack of all trades, master of none. Isn't that
right?
how it goes?
That's exactly right. Yeah. It's difficult to be all things to all people. And I think that's where, you hit the nail on the head. You start to cut short and cut corners on things that otherwise would be bread and butter activities. And again, I think, is a perfect example of when a client understands the framework through which you're giving advice and understand that there are fewer, hopefully, of conflicts between you and the advice you're giving, then they're more likely to trust you on an ongoing basis for those things. So I think we're both aligned on that. I think it's a good segue into some more tactical discussion points. You mentioned pension planning, year-end stuff. Obviously, we're recording this episode towards the end of the year in the fourth quarter of 2024. Lots to be excited about from a tax planning standpoint. With what you guys have going on now that you're sort of closed the books, hopefully on 2023, what are you talking to clients about? And if you wanted to break it down into, an everyday person with W-2 wages versus a business owner who's looking at implementing a retirement plan for the end of the year or any variety of tax strategies, how are you guys looking at year end? What are some of the things that you're discussing with clients?
It's a great question. Let me tell you like this. It's very simple. My friends and my family say, why are you so busy during the month of November and December? What could you guys possibly be doing? We understand you have your March 15th, your April 15th, then September and October. It's enough already, right? You should be on vacation sitting at the beach. And I said, you're right. I think a lot of CPA firms are doing that right now. We're different. What are we talking to people about between now and the end of the year? For our business clients, we're saying, let's get the books closed through September. We see where your taxable income is at right now. Let's project it out to the end of the year. And what can we do today, before the end of the year, proactive tax planning in order to minimize your tax liability? And people are like, well, that's a great service. Thank you for bringing that up. So we get the books together, we set up meetings, and we talk about it. Did you maximize your 401k? The most overlooked, massive deduction out there, right? I tell this story to so many people, whether you're a business owner, whether you're a W-2 employee working for somebody, a 1099 contractor, it doesn't really matter. Think about the power of saving and the tax deductions. Take your average person. It's actually kind of a true story, rings true with my father. Pat, I may have told you this in the past, right? Grew up, he worked at JP Morgan and all the banks before then. And on his first application in HR, they come to the 401k section and he says, well, what should I fill out here? And they said, oh, maximize it, always. He's like, okay, checks the box, maximize. And he looks at the HR person and goes, well, why? I don't really understand that. I'll have less money now. They said, you pay yourself before you pay your bills, and you'll thank me one day later. So for his entire career, he just maximized. He got the pension match from the banks, and he retired, and he comes to me and he goes, well, what do I do now? I said, Dad, Mom, how are you going to live? How are you going to pay your bills? And he goes, what do you mean? And he shows me his 401k statement. After I picked myself up off the floor, it taught me a valuable lesson, right? Never miss a year. Always maximize the 401k. And we tell business owners, we do a lot of tax planning for individuals, right? Same thing. Take a look at your charity, right? You should make deductions that are grouped together. If you plan on giving a big amount in 1 year, don't spread it out over 10 years where it's not going to matter, right? Do it in 1 year. Maximize your HSA contributions. Let's look at all the different things that are out there in terms of retirement plans, if you're a small business owner or a regular business owner, it doesn't matter, right? One of your favorite topics for tax planning would be talking about capital gains and losses, right? At the year end, more towards December, when we're reviewing the individual, we'll always ask for a copy of the last brokerage statement. And our typical client will have, interest and dividends and then capital gains realized. And I said, so you're telling me in your portfolio, you have no losers? They say, well, I don't know. My broker handles that.
Right.
Do me a favor, go back to your broker and ask how much we have today in losses that have not been realized. And the typical client will come back and say, well, now I understand it. So we were showing on the last statement 100,000 as an example of capital gains. But most investment advisors, brokers will not say, let's sell off the losers today, wait 30 days to avoid some wash sale and rebuy them if we like the stock and minimize that capital gain. It's so overlooked by most. And I know your firm, right, does exactly that at the end of the year,
Right.
harvesting losses. It's key, right?
And so simple, but often if a client doesn't understand it, it's important to go through and discuss why that's important. Because often when you're taught when you're investing money, a loss is not a good thing. But in this case, it can be. It can be really helpful in a scenario where you can whittle away at your gains and reduce the inevitable tax burden, or just build up losses for future gains. So that's a great one.
Right.
I'm curious. Yeah, go ahead. Sorry.
I was going to say, I see oftentimes that clients have unrealized losses with the same stocks in their portfolio for years and years.
Right.
And I never really understood why it's left there. The best explanation I've ever seen is, well, the broker didn't want to show the realized losses. However, what you said a moment ago, take the loss today, right? If you can't use it, you don't lose it. You carry it forward. It's key. So I agree with that.
I think sometimes it just comes down to that educational piece. And if your advisors aren't spending time with you as a client to understand why it's advantageous, it'll be difficult to make the decision in a vacuum on your own. I think oftentimes I have the same experience. We have clients who sometimes hold assets outside of us, but we're aware that they exist and they might have losses, whatever the case may be. And we'll talk about selling that investment for a loss until we're blue in the face. But if they don't understand why, whether it's the wash sale rule or, hey, we're gonna sell your SPY S&P 500 fund and we're gonna buy another one of the same type with a different ticker, and you're not going to lose any exposure to your investment type, but you're going to lock in that loss. Once you can finally get that educational point across, it becomes an easier conversation, which is why you have to spend time on the consultative side so that clients understand why you're suggesting the things you are.
Absolutely.
So I wanted to get into some more fun topics around tactical strategy and planning. One thing, I'll skip around here. I know you and I shared some notes. One item that's obviously on the minds of everyone, especially with an election in our country, if we haven't heard enough about it coming up in exactly a week from today from when we're recording, is we have legislation that is set to affect individuals, corporations, and estates that is set to expire at the end of 2026. And by all accounts, we've lived in this sort of lower tax rate environment and higher exemption on the estate side for almost, I guess it'll be 7 tax years once at the end of this year. And that's set to expire at the end of 2025. We've been talking about this with clients quite a bit in terms of, without being political, there will need to be legislative changes for anything to change between now and the beginning of 2026. So I'm curious from your perspective, and I know I'm sure a lot of the same things we're talking about with clients, but how are you guys thinking about the whole, Tax Cut and Jobs Act expiration, the sunset provisions for individuals, corporations, estates, gifts, the whole gambit, which is obviously a complex and long topic, but would love your thoughts and strategy around all that.
Yeah, so there's really 3 different buckets that we could talk about. It's the individual taxation, the corporate taxation, and then the estate and gift. Right? Those are the three main things that we believe will be affected by the sunset in 26. When it comes to the individual side, look, no one has a crystal ball, but if we think that rates will increase and you have the ability to control your income in some way, whether you're a business owner or an individual, right? Whatever type of client you may be, let's go back to the capital gains. You're sitting with Apple stock that you bought in, 1993, and you have this massive unrealized gain. So would it be a good idea to sell it before the tax laws change? Well, we believe so, right? Pick up the gain now at a lower rate. And again, you love Apple, rebuy it after a period of time. It's really difficult because we don't have that crystal ball. They are set to expire, but who knows what will happen. Okay. On the corporate side, really what we think will be affected are the C corporations, right? The non-pass-through entities, which could be a massive issue. There's a simple fix for that, which is if we know it's going to sunset and you do not need to be a C corp, convert to an S corp. And an S corp just flows right through to you and has no federal or in most cases state income taxes. Okay. On the estate side, very, very difficult. Okay. And why is it difficult? Well, we have three levels of clients. We have your regular, ordinary wage earners. We have our middle income bucket, and then we have very high net worth individuals. So on the high net worth individual side, most of them have estate, tax planning, trusts. Our advice to them is max out now. Put as much as you can into the trust before anything sunsets. And what happens is all the income and the appreciation and growth is sitting outside your estates.
Right.
So if the exemption comes way down, I mean, listen, it could go down to $1 million, right? Could go to 5 million. Wherever they end up, over 13 million today, if you have it out of your estate and you can do that, take advantage of it now. Same with businesses, right? People may want to take their appreciated small and medium-sized business and move them into a trust today, especially if they plan on selling it at a later date. With the middle income, it's really hard to tell somebody who may have, let's just say, as an example, $1 to $2 million saved to, put that into a trust that you can't touch.
Right.
And it's difficult, but making people aware of these rules and what could potentially happen at least gives them flexibility and the knowledge to make a decision.
Right.
They may have had it in their intention and in their mind for, if they have 1 or 2 million, they wanted to give their kids 500,000, right? For buying a house or whatever. Maybe the time is now to do that, or just put it into a trust so it's out of your estate. And one other thing that I try and push is going back to that example that I just gave you about Apple stock. Maybe it's better, instead of rebuying Apple, go into some tax freeze, go into some muni bonds or other vehicles that may have a tax free or a deferred tax type of, element to it.
Right. Yeah, I think it's very well put across the various veins that could be affected in the coming handful of years and the gray area that exists. And I think, I'll pat us both on the back again. It just points to the importance of...
You love using that word, pat.
You're right. It has something to do with the name, I suppose. No pun intended on the patting ourselves on the back. But it really is true in that it's why you have to have professionals that I think coordinate with each other so that you have a game plan in place. If your retirement looks well funded and you don't have major need for certain assets in your estate, now is absolutely the time to be considering, how can I move these out of my estate, take advantage of the exemptions. But that conversation, when you don't have professionals that are aligned, might sound like three totally different conversations if you're talking to your financial advisor versus your accountant versus your estate attorney potentially. So I think having that quarterback and that alignment is really where some of these critical planning areas that have legislative effect to them in the coming years are important to make sure that you're having those discussions. And I totally agree. Get the educational, advice out there so that clients can be informed about the decisions they have to make.
And
Speaking
not only
of,
that,
yeah,
sorry to cut you off,
no,
but
please.
not only that, the investment advisors, the CPAs, and the estate and trust attorneys should all be in a meeting together, if possible, with the client,
Right.
because then we're all speaking the same language and have a comprehensive plan together. Too often, people do not talk to each other. They're different professionals, and you end up with a situation where one says one thing, the other has a different opinion, and there's no clear game plan for the clients. And
Right.
it's client service that matters, and giving them the education and tools to be able to make decisions.
Totally agree. And you mentioned in discussing some of the corporate changes that we could see in the next couple of years. And I know you've educated us at the firm quite a bit on some of the advantages of having the right entity structure. But I was hoping you could touch on that a little bit as an educational piece for the audience. In that we both talk to clients all day long who are starting businesses, involved in businesses, buying into businesses, and I think there's an enormous lack, and for good reason, because it can be complex stuff. But how should they set up an entity? Should they have an LLC for real estate? Should they have a business that's in an S corp, or should they just file on Schedule C? And I know it's a complex topic that I'm putting to you, but how would you illuminate that in sort of a general sense on how should you make those entity type structural decisions for your own business?
Well, Pat, I think I've given you enough education that I'm just going to give them your phone number and email, tell them to call you now.
That's fine too. That's fine too.
So let me try and break down this complex question that we receive multiple times a week. And there's no answer that I could provide to a client that would be the same across the board. And the factors are, what are you actually doing? Are you buying real estate, consulting service? Are you in manufacturing? And the other factor would be, what state are you going to operate in? State or states. So let's go to the most popular one, real estate. My wife and I are going to buy a piece of real estate. We're going to rent it out. What entity should we be in? 99% of the time, I will tell you to put it in an LLC. The LLC provides a lot of flexibility to the owners and normally will provide what we need, which is the protection against any lawsuits or claims. And in almost every state, real estate being in an LLC is tax favorable. And what I see is clients start out where they buy one piece of property and then they buy another, and they create these monstrosities of entities that they have owning all these pieces of property. So for all of our real estate listeners, if that's your plan, what I like to do is set up we'll just call it the Master Pat LLC. Okay. It sits up here. And then every piece of property you buy goes into its own LLC underneath it as a leg. But we only file one massive tax return because it saves time, complexity, and puts everything into one bucket. So real estate, pretty straightforward. If you're an operating entity, I would tell you almost in every industry that the favored choice is going to be an S corporation. And an S corporation is merely taking a C corp or an LLC, either one works, and converting them and creating a tax only item that says we want to operate and file as an S corp. But it doesn't work in every state. So we've developed these complex models that will help us teach our clients what's right for them and what's wrong. Okay, so let's take an example. We have this guy, Joe. He's a consultant, and Joe works in New York City. He's getting paid on a 1099 as a single member LLC. And we meet up with him and we're like, Joe, do you understand what you're doing here is A, you have the highest audit rates being on a Schedule C, a sole proprietor. Secondly, your rates are not where they need to be, and you're missing out on this wonderful QBI deduction. And he goes, oh, really? Teach me about it. I said, well, let's see. Why can't we convert you over to an S Corp? And you live in New Jersey, but why are you in New York? He goes, oh, I work from home. I'm like, all right, bingo. We convert him from an LLC into an S Corp, state of New Jersey. IRS has no tax to the S corp. State of New Jersey has a maximum tax of a little over $2,000. That's it. And everything flows onto his individual return. In addition, the statistics that are out there from the IRS on audits are the lowest for an S corp, highest on a Schedule C. Now, if he was working in New York, truly it would be a different discussion because S corporations in New York City have a higher rate of tax. So it's state by state, very complex. And just to end off this topic, some clients are really eligible and need to be C corporations, right? It could be foreign ownerships. It could be them saying, we're going to start a company. We're taking it public. We know it needs to be a C corp. And we have various other regulations that determine that it needs to be a C. My least favorable for now is the C. And, it's just something that needs to be discussed. And for all the attorneys that are out there, they love to pick the LLCs, right? That's just their go-to. And it took me a while to figure out why. Pat, do you have any reason why the attorneys love the LLCs?
It's a good question. I don't know if I've thought about it. I'd agree that in my experience, it's often attorneys who will recommend an LLC. Is it because of the documents that end up needing to be created from a legal standpoint, from which they get paid?
Okay, that's a good point. I wasn't going there, but yeah,
okay, fair.
Money, sure. But yeah, they could charge more. But the real reason is because an LLC has so much flexibility, and you can easily, with a tax form, convert it into an S corp or choose the entity selection to be a C corp.
Sure.
Right. Once you choose an S corp, you can't go back to the LLC. So many times clients come out, oh, I've got this great idea. I need an entity right away. They'll go to the LLC structure and then afterwards talk to us and we'll do what's best for tax.
Right.
I hope that's a good summary of some of the complex issues surrounding entities. And I think, to be honest with you, maybe our next podcast should only be breaking down S corps, C corps, and LLCs and sole proprietors.
I think that's a great idea. I think part of my hope from this initial go around was to get some general stuff out there to our clientele and the folks that listen, and then have maybe a series that we do on some of these topics, since we could spend not just a half hour, but probably hours on each of them. But in that vein, so we're coming up a little over 30 minutes. We'll go through a couple more questions if you're good for time, Jake.
Sounds great.
And then we'll wrap up with some fun stuff. I had a more general question, and I'm curious for your answer here. Is obviously clients of both of our firms often are so worried about audit risk. You touched on a really interesting one that I didn't know until you educated me on the fact that S corps have some of the lowest audit risk relative to other entities. But in general, when you're looking at all of your experience, what are some of the easiest ways for people to get audited? What are the pitfalls? What are the things that you need to be careful of, whether it's general or specific from your standpoint?
Don't use TurboTax.
That's a perfect one.
Consult a professional. But the IRS and the state statistics show that filing a Schedule C, which is a sole proprietor or a single member LLC, is most often audited. And the reason that the IRS gives is because they're not sophisticated taxpayers. Now, they may be. However, most people filing that type of form can often do it themselves and think that they're okay. That gets people audited. In addition, not understanding some of the rules surrounding wash sales and reporting capital gains properly on your tax returns, not saving the proper documentation and estimating things. Like my favorite question to clients, how much charity did you give this year? Oh, same as last year, just about. No. Go back, check your records, see what you actually gave. And you also need to look at your income and your assets versus your deductions on an individual return. Just one note on corporate returns. Huge mistakes that I see from other CPA firms are the labeling of the expenses, right? It's so easy to call something travel, but many times I see CPA firms putting down auto lease expense or gifts to clients for $25,000. No, the labeling you really have to understand how to prepare a tax return, and that's what professionals are for.
Right. Right. Those are some good ones, and probably ones that I would imagine most folks don't have any idea that they're potentially tripping up when they're making a mistake like that.
Oh yeah, I mean, in the past, I've seen clients that have come to our firm, and just as an example, they have 200,000 of adjusted gross income, yet their deductions between mortgage interest, charity, and taxes is over 100,000. I mean, just come on, it doesn't make
Yeah.
sense, right?
Yeah. Right. Right. Right.
Show what you've actually done.
So let me ask you one other, probably a layup, and then we'll go to some of the personal fun stuff. Is, I know for us, clients ask from time to time, and I think you and I both have the same answer, but being geographically proximate to the client, does that matter for you guys, for Vision Financial Group? For us, we obviously have our answers, and I understand it can matter for certain state attorneys and attorneys in general, state specific laws. But how do you guys think about the geographic proximity for clients? Because I know we'll have clients ask, "Hey, do you have a CPA in Georgia or Florida?" And I have my answer, but I'm curious for yours.
It makes absolutely no difference to us.
Right.
Between phone calls, Zoom, Teams meetings, no issue. But you know what? We travel a lot. We go to our clients.
Mm-hmm.
Last week I was in Florida. I was in Orlando at a client. We have clients in Georgia, California. If a client wants to hire us and they're not that close to us, we have no issue being there in person and traveling. And I think a lot of the other CPA firms have lost that touch after COVID, and they'd rather just do a Zoom meeting. That doesn't have the same effect as seeing somebody in person and seeing their reactions and emotions. So we don't think that it's an issue. In fact, we have clients that are out of the country that we've never met in person. I think what's more important is the service and understanding the tax laws, right? I love this question. Hey, we're in Florida. Do you think you can do our taxes? And I'm thinking to myself, well, there's no state tax return in Florida. It's just a federal return. I'm pretty sure we can handle
Right. It might be even easier.
Well, good question.
Right. Absolutely. So let's wrap up with a couple of personal stuff. As I've mentioned to you in the past, the name of our podcast being the Wealth Amplifier. We love to amplify topics and ideas, but we love, especially during interviews, to amplify the things that are important to you, whether it's charitable causes, philanthropic stuff, personal stuff you like to do. So what makes you tick, and what are you kind of passionate about, and what can we amplify for you?
In my time off, I love biking. I enjoy martial arts immensely. It does not, my body doesn't love the martial arts, but I love doing it.
Yeah.
You can find me tinkering pretty much on anything in a garage or any type of tool, and spending time with the family. That's really what I like to do in my spare time. And above all, I am part of an organization called Athletes for Israel, and I'm heavily involved with that. I encourage everyone, just check us out on the web. We do a lot of good work and charitable causes there. And I think that being part of an organization, no matter what you believe in, is extremely important and actually adds to the wholesomeness of a person. So, and any type of charity and an organization that people can belong to, it's like, I think the best way to explain it is it makes me tick, right? It makes me feel like, okay, I go to work, I have my personal hobbies, I have my family, but there has to be something more in the world than just those things. And it makes me feel selfless, and I'm really proud and happy to do that. Pat, what about you? What do you like to do?
I mean,
look at the tickers and symbols.
Yeah, right. I think that's an amazing cause, and I know we've learned a little bit about Athletes for Israel. Actually, and I think you heard, we learned about it without even knowing you were involved, and then found out you were involved, which was pretty cool. Small world kind of situation, but can attest to the great work you guys are doing over there. So by all means, audience members, check out Athletes for Israel. let's see. I don't know. What have I not shared on the podcast before? I was previously and need to get back to doing some big work for Big Brothers Big Sisters. I've been an active Big Brother. So outside of everyone knows, I think I'm very passionate about ice hockey, but that's a big one. I think it's extremely like the things you mentioned about being selfless, being able to give back, being able to provide some purpose to others selfishly gives you intent and an enormous amount of satisfaction. For me, I've always fancied myself as a good relationship person, so that's always drawn me to Big Brothers Big Sisters. I'm sure folks are familiar with the work that BBBS does, and I've been proud to help them out in the past and mentor young kids and whatnot. So yeah.
Sounds great.
Yeah.
Thank you for sharing that.
Yeah, absolutely. So I think we are definitely going to need to do a part 2 here. But I think this is a great table setting podcast that I think our clients are really, really going to enjoy. And thanks so much for coming on, Jake. This was excellent.
Thank you for having me. Appreciate it.
Until next time. Thanks everybody for listening. All right. Bye.